brought to you by Rio 2.
Alasdair Macleod, welcome back.
It's nice to be back. Thank you, Peter.
Obviously, we were meant to do this just before Christmas. I was unwell, so we had to postpone it to now. In a way, I'm glad in a way we did do that, because there's a lot to talk about. My first question, if you don't mind, is given what happened on Saturday with the capture of the Venezuelan president, how does your outlook for 2026 change, or does it change at all, given what happened on Saturday evening?
Yeah, I mean, basically, I think what we're seeing is an acceleration of, the sort of conflict, if I can call it that. It's not quite the right word, between the Asian hegemons and America. I mean, lots of people have made heavy weather of, the legalities of it and all the rest of it. But, since the Americans have forced regime change countless times the last 100 years, I mean, they don't care. They don't give a stuff for international law. It really doesn't matter to them. I think it's become a bit more obvious this time than it perhaps has been in the past. So I think that's the change. There is a lot of propaganda around this, particularly emanating from America. They seem to suggest that the vice president, who's now the new temporary president ahead of elections, is basically in Trump's pocket. That's not the case at all. And I think another point worth mentioning is that if America sends in troops of any sort, Maduro, earlier last year, in January last year, a year ago virtually now, made a sort of what is known as a porcupine defense. He distributed rifles around all his supporters, sort of territorial army, all the rest of it. So, the reason it's porcupine is that when you attack a porcupine, it just chucks quills at you and you come off rather hurt, but without eating the porcupine. And that basically means that Venezuela just cannot really be successfully invaded. It would be as much of a catastrophe as Vietnam, in my view. And on that basis, I mean, all this stuff coming out of, from Trump is ridiculous. It really is. His attempts, if you like, to just steal Greenland off the Danes and off the Greenlanders themselves is undoubtedly geostrategic in the sense that Russian missiles targeted at the east coast of America will pass over Greenland. So, I think there is a sense, if you like, in what he's trying to do, but the method of doing it is completely wrong. It really is. How that's going to play out, we will see. I think the big danger in all this is not so much, I mean, today, for example, we've had this Russian flagged tanker, which was flagged only literally days ago as Russian, being harassed, and I think it's actually been boarded by US Navy officials already. So that is a big escalation of the situation. That is not good. That really is not good. I don't think it's sufficient because of the situation, because this is a tanker which was just reflagged to Sochi literally days ago. So the legal position of the tanker can be questioned, if you like. So I think that Putin will stay his hand on that, but I think there are other considerations. And that is that any idea that Trump, if you like, can be trusted over the Europeans is being blown out of the window. I think the response from both, from Russia, I think will be to escalate the situation over the Ukraine. I think that is increasingly looking like a no-holds-barred situation as far as Russia is concerned. So far, Russia has been sort of quite patient, getting the territories that it needs or it wants, the Russian-speaking territories in the east those oblasts. And he's, but so far he's been very restrained when it comes to using Oreshnik missiles, for example, against military targets within the greater Ukraine. And I think that could well change. And I think that his intelligence probably tells him where NATO forces are. There'll be lots of them deployed secretly there at the moment. And I think he will attack them. China, well, I think in discussion with the Russians, are going to take the view that Trump is a loose cannon, and therefore he just cannot be trusted. The danger is that China might actually go on the offensive, not militarily. I mean, there's a lot talked about, China invading Taiwan and so on. I would dismiss that. I just don't see that. Apart from anything else, it's again, Taiwan is apart from buying fighter jets and all the rest of it, very much at the insistence of the Americans, has actually again used a porcupine defense. And so Chinese troops landing on the Taiwanese island, are likely to be harassed by snipers, almost the general public. I mean, that would be too messy. The Chinese know this. They're not going to invade, for goodness sake. That's not their approach at all. But I think the attack on America is going to be financial. Putting myself in Xi's shoes, I would just bring down the dollar. I mean, it's an extreme thing to do, but having laid the groundwork with CIPS, the Chinese settlement system, which excludes the dollar, having laid the groundwork for a yuan which is exchangeable, which will be, it is already exchangeable for gold. It's just that the rate hasn't been fixed. That is something that could happen. Fix the rate. And what does that do to confidence in the dollar? I think it kills it. So there are moves on the financial side, which the Chinese can do. They've still got something like 600 billion of US treasuries. They've probably hedged the risk in that to a large degree. We don't know. But that's something which they could bring into play. I think also there's a feeling that Trump's targeting BRICS because, for a start, Argentina accepted membership of BRICS, and then when Milei got in, that was rescinded for American support, as it were. Brazil, I have no doubt that Brazil is a candidate for regime change, which again, being the be in BRICS is a very, very important development. You've also got conflict over copper developing, I think, in the Democratic Congo Republic, or DRC, Democratic Republic of Congo, and also Zambia, which is trying very, very hard to stay neutral in all this. So you can see that things are actually hotting up, particularly on the commodity side. And I suspect that part of China's thinking in terms of letting the silver price rip was it's an extension, if you like, of their policy, their rare earth policy. They know what hurts America, and that's high commodity prices. So look at the price of copper. That's gone through the roof. So I think there are some very, very big headwinds heading America's way. And this is not, the way to deal with Trump is not to try and declare war on him or escalate military conflict, but basically undermine his currency, and that will make him powerless.
Yeah, I mean, we did see that in a way when he announced the first tariffs back in March, April of 2025, where it was rumored that China were selling treasuries overnight, and sort of, I guess this whole tariff plan in terms of being able to borrow cheap money, etc., was then being thrown out the window. There's loads there. I mean, there's so much there that we need to unpack a little bit. On Greenland, it seems like Trump potentially, he's flirted with the idea of leaving NATO before. It seems as though anything to do with Greenland in a hostile way would probably break up the NATO alliance in a way, wouldn't it? Can Europe even afford to defend itself at this point, given the financial mess they're in?
I mean, the European leaders couldn't organise light refreshment in a brewery. I mean, who knows what they would do? I mean, at the moment, they're running around in circles. You had a statement in Parliament today from Keir Starmer saying that they were not going to put troops on the ground in the Ukraine until there is a peace settlement or a ceasefire. You know, oh yeah. In other words, it's not going to happen. I mean, the European leaders are a joke, an absolute joke. And, you know, both Trump and Putin are looking at these clowns and thinking, you know, this lot are a damn walkover. I mean, they really are. They haven't got a clue. And, you know, America notionally, of course, the leader of NATO, basically wants to withdraw from that role. And, you know, sensibly what Trump did was he said, you know, we're not going to spend the money. You lot in Europe better start spending the money. And by the way, we will provide you the weapons to buy. So, you know, it's been rather in America's interest to disentangle itself, I think, from Europe. But having said that, on the international scene, the geopolitical scene, Trump is proving to be extremely dangerous. He is unpredictable. He changes his mind. And I think this boarding of a newly flagged Russian tanker, I think, is an unnecessarily escalation of the situation.
And in terms of China letting the silver price rip, how did they do that?
Well, basically, China has been controlling the silver price for the last 3 decades. You know, it started with the rare earths. It decided, right, you know, you ain't getting rare earths. And when the silver price started rising, I think China realized that it had to make a choice. Do we continue to suppress the price at the risk that we lose our strategic stocks, because they built up strategic stocks? I mean, bear in mind that China is the second largest silver miner, and also it is the largest processor of both silver, doré, and also metallic ores, copper, zinc, lead, and all the rest of it, where you find silver. So they have accumulated huge quantities of silver. They have been the swing factor in the price. That is absolutely clear if you actually look at the facts. So what she's done basically is she's decided to not completely remove supplies into the West, but to control them more closely. And this was really behind the new licensing regime, which applies from this January and is due to be in place for the next 2 years.
Because I'm looking at it at the moment. Obviously, most commodities are up going into the new year. Like you say, copper's up nearly to $6. Gold and silver at all-time highs. Even nickel went up 10% the other day, which is just crazy. How much of this is, I guess, demand or an influence from China versus just a devaluing of the US dollar?
Well, I think the overall background is that the effect, if you like, of a fiat dollar has been to suppress, in real terms, the value of base metals. It's also true of other commodities, incidentally, but we concentrate on base metals here. If you look at base metals priced in gold, which is money, and over long periods of time is relatively constant in its purchasing power, you can see that these base metals are extremely cheap. I calculate a basket put together by the IMF to be around about 18% where they were. If you like, up until Bretton Woods was abandoned, 18%. What that tells us is that in real terms, in other words, priced in gold, they're going to rise 4 or 5 times before they are overbought. Now, if at the same time the purchasing power of the dollar is going down, you can see that over the next year or two, the dollar price of this basket, and it includes copper, is going to be quite a bit more than that. I mean, you know, we could easily see it 10 times as much. That is the consequence of a collapsing purchasing power of the dollar. And of course, there are knock-on ramifications for that, because you're going to get higher consumer prices. I mean, wholesale prices, obviously, then consumer prices. And that does mean that you're going to get higher bond yields. And higher bond yields will pop the equity bubble. So, this is a situation where I think both the dollar and the US is in an extremely fragile position.
Essentially, what you're talking about there is, it sounds quite inflationary, right? So you're talking about higher commodity pricing, etc. We're now starting to see quantitative easing, essentially all in but name, but from the Fed, where they're printing around $40 billion of new dollars to essentially buy short-term debt. And I guess this is the whole plan, right? In terms of the long-term rates are too high for borrowing. The Trump's been putting a lot of pressure and, I guess, politicizing the Fed, driving interest rates lower. They're now printing money, covering that short term, trying to get basically cheap debt. All of this is inflationary, and surely it's going to come back and bite them in the arse eventually once inflation gets out of control, because you can't artificially keep interest rates low for too much longer, can you?
No, that's absolutely right. I mean, they're set by the markets, let's face it. I mean, the problem is that once the equity bubble pops, then QE, you're going to see so much QE, because basically the Fed will have to support the entire economy, including the financial economy, by buying it effectively, underwriting it. And this is going to mean QE big time, yeah. And that's debasement of the currency, quite simply.
So not only do you have financial attack that you've been talking about there from potentially China on the dollar, you've then got your own debasement from within to essentially try and cover up the mess.
Yeah.
When you say a collapse and the bubble collapse, look, obviously the way I'm looking at it is one of the big moments that we're going to experience, and it will probably be priced in at some point, is Jerome Powell leaving. I think his last day is the 15th of May of this year. But they will announce who his successor is, I think within the next month or two. Is that the moment where we see this next leg up in gold and silver and potentially other commodities, when perhaps it's quite clear that there is a puppet going into the Fed, and that really the financial restraints and the controls that are trying to be sensible of the economy are just completely gone?
I mean, obviously, we're going to get a reflationist, a lot more than Powell. But the reality, I think, is that the Fed is not in a position to determine economic outcomes. What determines them are actually politics, and it's quite clear. Fed. I mean, Trump will appoint someone who is more friendly to his desires. And his desires basically are zero interest rates, unlimited spending. He's a spendthrift. And it will destroy the currency. I think that the change in leadership won't come as a surprise before it happens. I think it's beginning to be discounted. And to some extent, I think the rise in the value of gold measured in dollars is actually telling us this. What hasn't happened yet is that we haven't seen the rise in the bond yields at the longer end of the US Treasury market, confirming what gold is already telling us. And I think part of the reason for that is that it just hasn't been tested. I mean, the Treasury hasn't really been doing any funding out along the yield curve. It's been relying more and more and more on T-bills, if you like, short-term funding, which is effectively putting cash into the economy for cash. It's cash rather than proper debt cash. I just think that if you look at things like the carry trade out of the yen, I mean, you can see the yield on the JGB, the 10-year JGB, that's been going through the roof. Still some way to go before it really trips up the carry trade, but you can see the direction of travel. And I think more importantly, as far as Japanese pension funds and insurance companies are concerned, I mean, the whole rationale for them buying US Treasury debt is the higher yield that they get there, as opposed to in their own government bond market, the JGB market. Now, the pressure for them to continue to do that is obviously lessening as the gap closes. As well as that, if you look at who's actually funding this deficit now, I mean, the big names are Cayman Islands, offshore hedge funds, the UK, which basically is a financial centre, encompasses most of Europe, so that's that bit, and also Luxembourg. But what hedge funds have been doing in Luxembourg is giving Europeans an alternative to the low yields seen on euro bonds, and that yield enhancement has actually attracted quite a lot into it. So you can see that the funding of the deficit and also the refunding of existing debt being rolled over is just getting shorter and shorter in terms of its time and less stable. So I think it's in the sort of situation where if China decides to accelerate its selling of treasury debt, then it could actually destabilize the whole caboodle.
Why wouldn't China do that? They've obviously rumoured that they were doing that last year as a retaliation to the tariffs. So why wouldn't they do that now?
Yeah, I mean, I think the answer to that is that Sun Tzu reckons when the enemy is making all the mistakes, don't interrupt him. I think that's been China's approach. I mean, there is the very real thing that China does not want to be blamed for destabilizing the global financial system. There is nothing. There's absolutely no point in her doing that. What she will do, however, is she will take steps to protect the position of her own currency. Of that, I'm absolutely certain. And you referred to the April 2nd day when Trump was banging off with all his boards about tariff rates for X, Y, and Z and all the rest of it. I mean, in the wake of that, President Xi did two things. They announced an acceleration of the free trade agreement, or a move towards the free trade agreement between China, South Korea, and China. Now, okay, there's been a change of government, if you like, in Japan. But the other thing he did was a whistle-stop tour around Southeast Asia. And that was followed not long after by an announcement from the Shanghai Gold Exchange that they were opening a vault in Hong Kong. And also in, guess where, Saudi Arabia. So, this is clearly preparation for an exchange rate to be fixed between the yuan and gold at the time when it is appropriate to do so. And that time, in my view, and this is, you don't have to be the brain of anywhere to work this one out, is bound to be when the Chinese feel they've got to protect the yuan from a collapsing Western financial system. And that collapsing financial system, I think, is probably tied up very much with the equity bubble in America, the credit bubble, in effect. When that goes pop, then the whole system is going to be destabilized. And that, I think, is going to be the big story in the first half of 2026. And it will kill the dollar as well. I mean, from that point, the dollar's really going to go down.
In the heart of Chile's Atacama Desert lies one of the largest gold oxide deposits on Earth, weighing in at an impressive 4.8 million ounces in measured and indicated resources. This is the largest, permitted, fully funded gold heap leach project in the Americas. Rio 2 Limited is bringing the Phoenix Gold Project into production. Construction is nearing completion, on time and on budget, with first gold pour scheduled for January 2026, just weeks away. Phase 1 starts with 20,000 tons per day, delivering approximately 100,000 gold ounces per year at an ultra-low, all-in sustaining cost of just $1,237 an ounce. In today's record gold market, That's thousands of dollars in cash margin on every ounce produced. Rio 2 will also undertake a pre-feasibility study for a potential Phase 2 expansion. This will assess the full potential of scaling the mine to 80,000 tons per day, with the view of producing at least 300,000 ounces annually for 10 years, starting in 2030, making this a near-term, massive free cash flow company with even bigger aspirations and margins in sight. From one of the safest, most mining-friendly countries in the world, delivered responsibly by a team that's done this before. Be a part of it. Visit rio2.com today.
How do you foresee the equity bubble pop in? Is this because obviously a lot of people are talking about there's an AI bubble, and if that pops, that essentially wipes out essentially the whole stock market in America. Really, that's where most of the gains were last year. But at the same time, we are almost seeing what I believe looks more like a Cold War, similar to where Russia and China had the space race in the 60s and 70s. It seems like there's an AI race between the US and China at the moment. So on one stance, okay, it might be a bubble. On the other stance, it seems like both governments are fairly vested in trying to make this work.
Well, America, I think, more than China. I think the difference between the two is America takes a view that technology is for its defense industry. China takes the view that technology is actually for its consumer manufacturing businesses. And I'd like to remind everybody of the sort of rather hilarious moment after, ChatGPT and Grok and all the rest of them were sort of announcing hundreds of billions of dollars of investment in AI and all the rest of it, when along comes a little Chinese minnow, which actually did a pretty good job on about $5 million. The answer basically, I think, is shown in that there will be a far more efficient use of financial resources when it comes to China and AI rather than the US and AI. I think the point about what's going to pop the bubble is that it will be credit withdrawn, in effect, from the stock market. Now, how does that come about? Well, the answer basically is the other side of credit is debt, and we've seen how debt has been accelerating. Once you see bond yields begin to break out of that consolidation period, we've had a consolidation period which runs back to late 2022, I think, without looking at the chart. And we're waiting for that to break out. Japan has already broken out. You can see the long end of the bond market, the German bond market, that's already broken out. Others are sort of going that way. That's going to happen. And when that happens, that pops the bubble, because you've already got a huge, huge difference in terms of value between the returns, the interest return, the coupon returns, as it were, in bonds, and the rating in stocks. By my calculations, it is now greater than it has ever been in history, greater than in 1929. And that's quite some statement. So what you're going to see, I think, is a combination of credit being withdrawn by banks. And bear in mind also, if you look at the FINRA figures, on margin debt, I think it was I last saw it in, I think it was November was the last figures we've got, was about 1.2 trillion. Now, that's with the brokers. The brokers don't create credit. They go to the banks in order to get that credit. So that's bank credit aimed at stocks. Now, on top of that, hedge funds and insurance companies, whatever, where they leverage their positions, they don't go through the brokers, they go direct to the banks. So the FINRA numbers are just the tip of the iceberg. And consequently, when the banks find that the value of the collateral starts falling, they're going to be selling the stuff out into a falling market. I mean, that's exactly what happened in Wall Street, late 1929, and going on from the rally, the primary rally, which lasted, I think, until about May 1930. And then it just went down and down and down and down to an eventual bottom in the middle of 1932. I mean, we've got the similar sort of pattern, but this time I think it's potentially a lot more violent. It may not appear quite so violent in terms of dollar prices, because the dollar itself will be going down very substantially. But if you look at the value of stocks in gold, pricing them in gold, I think they'll lose well over 95% of their value.
So in that scenario, obviously, if you're saying price them in gold, they'll lose 95% of their value. What happens to the gold price in that scenario? What happens to other commodity prices? Do they continue to increase while everything else crash?
Yeah, I mean, basically, looking at gold is the wrong thing. Look at the purchasing power of the dollar. As that collapses, obviously the price of everything rises. Now, we're going to have in this year, I mean, there is going to be no doubt at all, we're going to have higher consumer prices this year, and they will be significantly higher. Nobody's expecting this, but it's the only outcome that makes any sense whatsoever. So as they go higher, what you will get is the political response. Everybody knows that the most stupid thing you can do, is to introduce price controls. But what will happen? The easiest thing to forecast is price controls. Why? Because politically, they will be seen to be necessary, even by people in politics who understand how counterproductive price controls are. That's the way that this is going, and it will just collapse the purchasing power of the dollar even further. I mean, this is a situation which is just post-Bretton Woods, end of the fiat currency system. And when you end the fiat currency system, unless you tie the fiat currency to gold, it goes down to zero. And I think this is a 2-year process maximum. It could even be a year to 18 months. I don't know. We have to see how quickly it happens.
Yeah. Okay. So not something you're expecting to happen in 2026, I guess, but perhaps 2027, 2028.
Well, I'm not even looking as far as 2028. I'm just using the precedents, if you like, of the best documented currency collapse, which was the German Reichsmark. That basically, I mean, there was you had a post-war loss of purchasing power. It stabilized, and between 1920 and the end of 1921, you had, in fact, the Reichsmark was the best performing currency of the lot. It rose against gold, believe it or not. The stock market rose as well, and that was, it was a wonderful thing. And you had this sort of new feeling of prosperity and all the rest of it. But in the second half of 1921, the gold price was already beginning to rise, signaling problems with the currency. The market peaked and then collapsed on December the 1st. I'm talking about the German stock market. On December the 1st, 1921. Now, it lost roughly 25% of its value, measured in Reichsmarks. But measured in gold, it lost 93% of its value. 93%. There's only 7% left. That's what we face. And I mean, the fascinating thing about it was that the finance minister, Karl Helfrich, was a good economist. I mean, well, I say a good economist. He was as well known as an economist as Keynes was in those days. He presided over this. He knew what he was doing. And not only that, but he was the architect for the post-Reichsmark Rentenmark, which worked. So you have to ask yourself, why was it that somebody who really knew what he was doing was in charge as finance minister, and admittedly not in the central bank, but as finance minister, to whom the central bank was subordinate? Why did he preside over a complete collapse of the currency when he knew how to stop it? We have exactly the same situation today. It's politics. Politics drives this, not common sense, not economics.
Someone else that we have on the channel quite a lot is a gentleman called Rick Rule. He not losing 93% of the purchasing power. He suggests that within the next 10 years that we'll lose around 75. So I guess either way you look at it, it does appear as though most people within the industry or who actually understand how the economy works and its relationship with gold do see quite a large devaluing. Is there a chance that, I think I've asked this question of you before, but is there a chance, especially now, given where we are today, that this can be kicked down the road for another 2, 3, 4, 5, 10 years? This bubble collapse that you're talking about can just, they'll print more money, they'll do what they need to do, but essentially the devaluing will happen, but perhaps everyone will be poorer, but perhaps there won't be that big collapse that we've been talking about.
I mean, there are two answers to this. The first is the level of debt is now at the sort of level where it becomes unfundable. So you will get higher bond rates, which reflect that risk, reflect, if you like, in the 70s, we called it a buyer's strike. I don't think you were around then, Peter, were you? We called it a buyer's strike. And you can see from a government economist's point of view how inconvenient it was that we had bond yields, gilt yields at the long end, which rose to over 16% in 1976. I mean, that's where we're going. We're in debt traps here, debt trap territory. So from that point of view, the answer is no. This is not something that can be kicked down that can be kicked down the road yet again. The other point I'd like to make out is that the value of any fiat currency is not only dependent on changes in its quantity, but also changes in the faith people have in it, the people who actually have in this currency. Now, that faith is deteriorating. I mean, you can see with the Chinese moves basically to take the whole of the BRICS and the Shanghai Cooperation Organization away from the dollar. Introducing, I mean, all this stuff about unit and all the rest of it is actually hogwash. What they're doing is quite simple. They're doing a Bretton Woods Mark III, and that is a currency system which is based on a yuan, which for trade settlement purposes will be tied to the value of the dollar. I don't see the Chinese public being allowed to exchange their yuan for gold. Sorry, tied to gold, I should say. I don't see them being able to exchange their yuan for gold. But at the international trade level, countries will be swapping yuan for gold and gold for yuan. That's the whole point. The only thing we don't know at this stage is what the fixed rate will be, and there will be a fixed rate. That way, the yuan for international trade purposes becomes a gold substitute. They won't need to hold gold, they can hold yuan. And that's basically where it is going. And the dollar will be out of it completely. I mean, if the dollar can't even try to go back on a gold standard because there is huge doubt over the gold reserves at the US Treasury. We know, for example, that a lot of gold disappeared into the market when they tried to rig the market in the 70s to drive gold out of the system. We know that there was a massive carry trade out of bullion, lease bullion. Your leasing costs were 0.5%, 1% tops. And at the time, you could sell it into the market and apply the dollar proceeds to US treasuries, which were yielding anything from 10% down to 5%, from the early 1980s onwards. So where did that go? Well, an analyst called Frank Veneroso reckoned that it all went into the market, never to be seen again. He thought it was probably adorning the necks of Asian women, which I think was a slightly flippant remark, but it was something that made the point. I reckon that China was in there picking it up because it was really from 1983 onwards, China basically embarked on a program of secretly buying gold. And, they had a wonderful bear market to do it. And when did the States suddenly decide that it could let its own citizens in on the act? That was at the bottom of the market in 2002. And the Shanghai Gold Exchange was then opened. And since then, the general public have taken delivery of something like 28,000 tons of gold. And that's in addition to anything which Chinese government acquired. We're not talking about the People's Bank's reserves at all. That's a completely different thing. But what they acquired, I reckon they could easily have acquired between 20 and 25,000 tons by 2002. And they have continued to acquire gold since then. I think at a lesser pace, admittedly. But they've got ample reserves. And a lot of those reserves would have come out of Fort Knox, in effect, as a result of America's attempts to drive gold out of the system and replace it with the dollar.
Yeah, not just that. They're the largest producer of gold as well, aren't they? And like you said, they've been accumulating for such a long time now. I mean, as someone that you know, obviously Dominic Frisby, I think he estimates that even if all the gold was in Fort Knox, China would still probably have 3 to 8 times the amount of gold that the US claims to have. So, I mean, in a scenario where, that probably sounds silly even asking the question, but in a scenario where the US did go back onto a gold standard or somewhat of a gold standard, I guess, would China mine too much, given that they hold so much more, potentially hold so much more gold?
I think China would take the view that's not our business. I mean, in order to make it stick, Peter, they'd have to establish that they got reserves. Another factor is that the entire macroeconomic establishment in America thinks that gold is a pet rock. So they're going to have to do somersaults in their own intellectual approach to money and credit before anyone can really decide how they're going to proceed on a gold standard. I mean, the difference really between the collapse of the Reichsmark and what we're seeing in the dollar now, and it's very much the early stages of the dollar, that sort of final moment, as in the final couple of years. The big difference was that they knew in Germany what they were doing. In America, they haven't got a clue. They don't understand money and credit. They think that the dollar is money. I mean, even Austrian economists think that the dollar is money. They've lost the plot completely.
My point being, if the US is supposed, one of the largest enemies of that state, let's say, as they might look at it, has 8 times more gold than them, and they go on a gold standard, China all of a sudden becomes quite a wealthy nation, does it not? By the same standards?
Well, what I would say, I don't think that's quite the way to put it. What I would say is it is the nation with the greatest credit stability. That's the key point. And it was that credit stability which gave us the Industrial Revolution. China is now in a position to do exactly the same. All it needs to do is fix the rate.
But would it not, even just from militarily, obviously it would allow China, I guess, in a way, in terms of that credit stability, to, I guess, advance at a I guess they're advancing at a rapid rate anyway, but continue at a much faster rate than the US, wouldn't it?
Yeah, oh, absolutely. But it's bigger than that, because by putting the yuan onto a gold standard for international trade, then you're looking at the Industrial Revolution really taking off in all the BRICS and Shanghai Cooperation Organization memberships, and the whole of the global South who wants to join in on this. Yeah, I mean, you've got India is developing very rapidly, and incidentally, I would say that just looking at GDP actually doesn't tell the whole story at all. All that is a measure of the amount of credit being deployed in the economy, not how it is being deployed. But India is really taking off now. And of course, this is one of the things that has led to the silver price rising, because China realizes that, India's demand for silver, because it gets into photovoltaics and all the rest of it, is just going off the charts, because India is where China was 30 years ago. There is massive development to occur there. And you've got, the whole of the rest of the world is sort of, one step behind India. Africa, where I'm going at the end of this week, that again has been growing quite rapidly from a very, very low base. But the industrialization of Africa is I think, over the next 10 years, going to be something to behold. So we're seeing an industrial revolution, not just for the elite developed economies, the G7 economies. We're seeing it for for the emerging nations, the 70% of the population which hasn't enjoyed it yet. This is massive. It's absolutely massive, and we don't have a part in it. And we don't even understand that, the implications. This is something that I think even Trump is trying to stop.
In fairness, yeah, that's exactly it. It almost feels as though obviously China had quite a lot of, obviously there was influences from China around different places into Venezuela. You look at potentially what's going on in Iran at the moment, and the US, Trump even coming out saying that if you shoot protesters, we're going to get involved. Obviously, there's all this talk about Greenland. It does seem like this is the start of, I guess, a shift of this Western hemisphere that they keep talking about, protecting their own backyard and not allowing influence from outside. And I guess they have to do it, like you said, it now or never, really, from their perspective, because their currency is failing.
Yeah, I mean, I think it's the basis, really, of conflict going on from here. Very much so. I mean, obviously, you've got the natural antipathy, but so far, I think the Chinese have been extremely sensible. They've done nothing to provoke anything. It's always the Americans who've been sort of trying to push China into some sort of reaction. Really all Russia is interested in is securing its borders and keeping NATO, which is an enemy, away from Moscow and Leningrad. And this is really what the whole thing about, this is really what the Ukraine is about. I mean, remember the sequence of events. You started off with Victoria Nuland and, her crowd basically destabilizing Ukraine. You had the color revolution. You had, all that sort of stuff, and changes of governments and all the rest of it. So you had Western puppets in there. And then 2022, the situation was getting so threatening to Russia. I mean, there's absolutely no doubt where the Americans were going with this. They wanted to dismantle Russia. That was, so Ukraine was the spearhead for it. What Putin did was actually very, very sensible. He just went in, sent in the stormtroopers, got it, as far as Kyiv, and then withdrew. And then said to Zelensky, right, let's talk peace. Let's talk how we can settle this. Zelensky was prepared to do this. They met in Turkey, and they signed heads of agreement. And then Boris Johnson was sent in by the Americans to stop it. Why? Yeah. And who's lost all? I mean, who's lost? The lives. There's a whole generation of Ukrainian men. If they haven't fled the country, they've been killed in the battlefield. I mean, the slaughter as a result of our actions is absolutely astronomical. We've just completely ruined the nation and its people and killed a lot of them. It's us that's done it. Because Boris Johnson was sent in there, like a sort of minion to go and stop an agreement between Ukraine and Russia.
I know it's such a shame as well, because it's likely that the outcome is going to be exactly the same as what they would have signed back then, if not worse for Ukraine. It is such a shame what's happened. And
now we have, European leadership who, one weeps at their incompetence and their propaganda. They believe their own propaganda. You've got this sort of groupthink. And because America has said, well, look, this is your problem. You damn well pay for it. We don't really want to get involved. Trump has sort of tried to come to some sort of agreement, as it were, with Putin over the European heads. I mean, they're running around like headless chickens.
I think there's also an aspect of them trying to keep NATO together at one point, I guess, and then also you look at Macron and Starmer are just trying to stay relevant, I guess, and stay within the picture because they're being isolated by Trump and Putin, aren't they? That's the reality.
Yeah, we can understand why they're incompetent, but it doesn't excuse the incompetence. It really doesn't.
Look, I think some in terms of the bubble and things coming to a head and a collapse, and especially this debt trap that we're in the UK, in France, in most of Europe, I completely am I'm on board with what you're saying. I feel like that is inevitable. Whether or not the US can do anything to get themselves out of it, I still think is a bit up in the air. I know you think it's absolutely no chance at all.
No chance. And I mean, if you look at the situation now, you would come up with a view. I mean, you raised the question. Is it not just possible to kick the can down the road once again? I mean, the answer to that question is when the equity bubble pops, and it will pop because bond yields will rise. When that pops, then the entire financial system, based on dollars, is going to start falling apart. Why? Because the Fed's mandate is quite simple: keep the show on the road. I mean, when we had the great financial crisis, which I think is a misnomer because the next one will be even greater, the Fed effectively wrote an open check, which I reckoned at the time was a potential liability of $13 or $14 trillion. And that was when $1 trillion really meant something. Now we have a situation post-COVID and all the rest of it, which accelerated up the level of debt and all the rest of it. We have a situation where the Fed simply cannot afford to do QE because it would undermine completely the value of that debt. I mean, it's the only way it gets sorted out. The way in which debt gets sorted out is either it defaults or it gets devalued. They're going to go for the devalued option. There is no other option. And once the dollar really starts sliding, I mean, look at foreign investment in US equities. That's 20 trillion out of a total of about 42 trillion. And we're looking at numbers which are, dwarf GDP, which is around about 30 trillion or 31 trillion or something. I mean, if you look at the overall government debt, I mean, we're looking, 38.6 trillion? I mean, these numbers are absolutely enormous. And the only way you can deal with it is to devalue it effectively. I'm not saying that's the deliberate policy, because what will happen is that the Fed will rush in. It will be forced to try and rescue everything, the banking system, the derivative system, which will be in a state of collapse if it doesn't. The stock market, it's got to retain the value so that there's confidence in the economy. All these arguments have been argued since Greenspan ran the Fed. So the whole situation is one for a dollar collapse. And, I think people who think that inflation is a process, a mathematical process, have got this entirely wrong. Because firstly, the foreigners will lose faith in it, and that will drive it down. And as the foreigners lose faith in it, you will find that US institutions start losing faith in it. And the last people to lose faith in it, of course, will be the general public in America. And they will then learn the hard way, once the dollar's lost another 99% of its purchasing power or more, they will then learn that it's not prices going up, but it's their dollar going down. And at that point, they'll start dumping it. And then it's finished. Game over.
Yeah, well, like we said before, they are starting to print. They have essentially gone back to QE already, and it does seem as though borrowing in the long term is just getting too expensive, and they will carry on this short-term borrowing. It's it's a recipe for disaster. I imagine you're probably right. It will lead to more devaluing and more money printing right at the end of the day. Just in terms of just very quickly, forecast silver, gold. What do you think this time next year?
I don't give forecasts, and the way to look at it is it's not what gold's value is; it's the dollar. It's the dollar's loss of value which will be driving it. I mean, by the end of this year, that the gold-dollar exchange rate could well triple or quadruple. I don't know. It depends how fast the dollar goes down. Yeah.
Maybe the right way to ask is, I guess, between the next 12 months, how much devaluing do you think we could see? How much depreciation of the dollar's value could we see in relation to gold?
I mean, I think at least half. I would not be surprised to see at least half, maybe even 3/4, maybe even 90%. I don't know. I mean, it's interesting. If you look at the Reichsmark model, I mean, we're at the point really where the collapse in the purchasing power really does begin to accelerate, and that's what the gold price is telling us. It's that moment, if you like, that they had in Germany in the second half of 1921, when the gold price really started rising. This was before prices really started rising again, and the stock market was in its last run. The end of the run was December the 1st, where there was it effectively collapsed. The stock market collapsed, and you saw gold, double, triple, quadruple from there over the course of the next year. And of course, by November 1923, it was the end of the Reichsmark, and the conversion rate measured in gold or dollars, which were the equivalent of gold at 20.67 the ounce, measured in dollars, there were 4 trillion Reichsmarks to $1. Yeah, that's where this is going. I mean, unless the politicians have a Damascene conversion and begin to realize what they're doing, not only realize what they're doing, but have got the political mandate to do it and to overcome all their economists' misconceptions, macroeconomic misconceptions, then they can stop it. Chances close to zero.
I agree. It's you never know. We'll keep our fingers crossed though, eh? Alasdair, I really appreciate your time. Thank you so much for coming back on.
That's very much my pleasure, Peter.